The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve. Thank you for taking my call on this one and to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. The material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 7th Twitter Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. I love this tool. This is the tool I call the laws of life. I consider the following to be the top 6 laws of life. Beginning with number 1, be aware that you are created for success, not failure. Think about that, folks. You know, failure is just a way not to do something. Number 2, refuse to allow your mind to dwell on worry or the negative side of things. Always take a positive action to change your negative thoughts. Worry or fear, well, it's natural. It's just that fear is false evidence appearing real. So let's get rid of it. Immediately go to your gratitude list. If you don't have a gratitude list, folks, use that phone of yours, that power of that phone, other than, listening on TFNN.mobi, use that memo pad and create a gratitude list out there. Number 3, train yourself to realize that nothing outside of yourself can control your life. You have the power to decide how you will deal with your thoughts. This is, in my opinion, one of the most powerful tools that each of us have. You have control, not someone else. Number 4, direct everything in your life toward the service of others. Boy, that's what we love to do here at TFNN. All of the hosts out here, we love directing ourselves toward the service of others. The 2 highest levels of living are what I call needs that all humans have, and they are contribution and growth. The other 4 primary levels, well, that's what we refer to as certainty, uncertainty, significance, and then love and connection. We've got all 6. Just some of us have them reshuffled around. Mine, clearly, contribution and growth. Number 5, know that you are important to the world, and there is a niche in life for you to fulfill. Number 6, just because you can't see it doesn't mean it's not there. Let me give you an example. It takes approximately 8 minutes for sunlight to travel 93 million miles to reach Earth, yet it happens every second of every day. Secondly, it's tasteless, it's odorless, and unless a rainbow occurs, it's invisible. Yet prismatic droplets of mist can make what was there all along suddenly visible. The rainbow, it reminds us that the unseen world holds many treasures for those with eyes to see. And we all know what it is that's at the end of the rainbow. That's right, it's a pot of gold. Life is golden, folks, and these are my top 6 laws of life. I say, have a golden life. Now, let's go check out the golden markets that we've got out here. Oh, and you thought we were going to be talking about Twitter, but no, it's Super Mario to the rescue again. Super Mario cutting rates out there, that throwing the markets in a tizzy, and each of us want to know, what does it mean, right? So let's just start taking a look at the markets here. First of all, let's take a look at our heartbeat of the markets. Let's look at the ES Mini out here. This is the 30-minute chart. This is the ECG, electrocardiogram. This helps us to understand when markets get to overbought, oversold, as well as a number of other things. Of course, we're paying attention to here on this chart is that yellowish box. If you're not watching us on TigerTV, remember you can go to the homepage of TFNN.com. You can do it right now. Over in the upper right-hand side, you'll see a button. 3 little smartphone devices. This show will stream live to you on your smartphone, your pad, whatever it is. Of course, you can catch the archive of this on Channel 9. So you've got the big movements in the currency market, which we're going to take a look at. But I know most of you are right now focused. What does that mean for me in the stock market here? Yesterday we saw a big move inside the Dow, not so much in the other indexes out there. And so if we take a look at what's going on, I've shown you this 25-point consolidation range. I haven't really touched the yellow box here other than just to expand it sideways to pick up more time that has gone on. The markets, quite frankly, are still traveling within this, in the case of the S&P 500, this 25-point consolidation. Not rage, I see that it says up there, range out there, the top of which has not been taken out. Now, Super Mario was able to help to push the markets higher, but you can see it ran right into resistance out there. Now, the cool thing is that if you see a breakout above, let's say a level here is going to be 17, well, I'd like to call it 1776, really. That's really what the level should be, because if we go back, which we can do, we'll take a look at the daily chart out there. We know that's where we had an A to B equals CD. So the top of this pattern here inside the 30-minute chart we're looking at is about 1773 and a quarter or 50 or what have you. Really needs to be a close above 1776. And then what that says is, okay, we've got another maybe, 900 points or so, 1,000 points inside of the S&P for the markets to move higher, but only when we see a breakout. Now, here's the key, and you want to write this number down. If for some reason today we see a close below 1763.50, folks, that will be your first sign of bearishness in the market. What you really want to see, what you really want to be paying attention to, all of us, is either side of this consolidation box. So the low of the consolidation box, that's going to be somewhere around the 1747 level. But 1763.50, very important to pay attention to. There are 2 lunar cycles that work better than any other celestial cycles, lunar cycles, anything that I have ever seen. It always amazes me. Always amazes me. You got to use it all the time, and that is apogee and perigee. We had perigee come in, I believe it was not yesterday, the day before. Probably it was early in the morning, and 1763.50. That is the number to be paying attention to. Why? Because when price is above that, you're looking for long trades. Now you have to understand where resistance is. In this case here, we know where the resistance is. It's the top of this box out here, and so far this could be a big blow-off top here. We'll know when we see, and look, for me, I'm agnostic with regard to what it is right now. I'm not going to chase this thing long here. Not a chance. Am I short? Yeah, I'm not short, though, inside the S&P here just yet, but it's not a bad place to put on a short if you got some quick fingers out there. Again, it's a consolidation box that we want to be paying attention to. Now, that's what took place so far on the ES Mini with regard to the ECB announcement. Let's go take a look at where the real strength in the market has been. It's not the Dow out there. It's not those 30 stocks. And we're going to take a look at the NASDAQ futures. Now, we saw the ES Mini, and it actually got up to the top of the consolidation range out here. You can see that the NASDAQ futures, not a chance. They have not gotten up to the top of the consolidation box. In fact, what we actually saw out here, the most recent swing point high inside the NASDAQ futures, which was up at the top of the consolidation, that came in at 10 o'clock in the morning. This was on November the 6th, so that was yesterday. That high, that wasn't even the top of the consolidation box, was it? That was pretty close up there. The high out there, 10 o'clock yesterday, came in at 33.98. 33.98. If you take a look at the high, now it was a nice wide-ranging bar, no question, during that session from 8 o'clock, 7:30 to 8 o'clock, just shortly after the ECB announcement out here. But what was interesting, what stopped it in its place here, number one, you had a little shooting star that took place right here at the 8:30 session. You got a 0.618 retracement, a 1.272 expansion of a set of swing points out here. The NASDAQ futures is not joined in on the party. If this market is going to break, and it can, but if this market is going to break, you're going to see a move. I'm going to go ahead and get rid of this here. You're going to see a move above this consolidation box inside of the NASDAQ futures. That's a nice 38-point move to the upside. Heck, it'll be much, much more than that. Now we can see here that price also moved into the extreme, or not the extreme so much, but it moved into the overbought territory. So we know that a market has to work itself off just simply by either moving sideways or pulling back here. We don't have a break in either direction, but the NASDAQ futures are not exactly joining in on the party here. So we see the ES Mini, that stopped at a resistance area. Heck, the NASDAQ futures stopped at just normal Fibonacci expansion and contraction numbers with regard to resistance. So it has not broken out. So that's and that represents two of the biggies out here versus the Dow. Let's go ahead. We'll put the Dow up here. The Dow is just into a world of its own as we speak. The Dow most certainly did break above the consolidation level, and that says, okay, if this is a real consolidation, if this is a real breakout here, what we'll see the Dow futures actually do is move up to a level of about 15,972. So far, that high that came in was 15,779. So it's the Dow against everything else right now. Now, look, I've got a little bit of a delay here, about a 10-minute delay inside of the Russell 2000, but that being said, you can see the Russell 2000. That has not joined the party. Yeah, we had a nice wide-ranging bar that came in here. If we go ahead and we put on this little study, you can see a little bit over a 0.618 retracement of its last swing point high. That coming in at about 8 o'clock in the morning yesterday. That was up at 1109.70 out there, but the Russell 2000, and that's been traveling in really two trading ranges, but primarily you've got this 36.5 point trading range. It has not joined in on the party out here. So, folks, what I am suggesting that you don't do is do not chase this. Wait until we see some confirmations here, because this could be one heck of a, hey, look, the folks at Twitter, they're loving it. They're Super Mario must have got some Twitter shares out there in order to come out, cut rates, and move the markets higher. Boy, if you were ever looking to be able to go ahead and sell your paper on the market, this would be the time to do it out there. So if the folks at Twitter, what's his name, Costolo, if he hasn't sent out some shares to Super Mario, they should be in the mail here soon. Now, that's what's going on as we take a look at the futures contracts inside the indexes out there, and I hope that gives you a really good overview as to what really is going on. So when you take a look at the screen or what have you, you see the Dow futures are up 68, S&P up 5.5, NASDAQ up 5.25 points or what have you. And if you haven't taken yourself yet to learn some of these great technical tools that we use out here, do that. Do that, folks. We're coming into the holidays here. Go have folks that are going to be buying you gifts. Go have them invest in Tiger dollars for you. All kinds of great training out here tomorrow. Basil Chapman's going to be doing a one-day workshop out there. All of us. So much great training, and we'd love to be able to contribute to you and help you grow. Super Mario. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind. Absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Obviously, big moves in the currency markets here. U.S. dollar index up 78 cents, 786 ticks out there. Trading out at 81.34. Euro back 173 pips out here. We're going to take a look at the currency market. Now, the way we're going to first start off by taking a look at the currency market out here is we're going to look at the correlation. I got this correlation chart. If you are watching us on TigerTV, let me explain what it is that we're looking at. The top portion of the chart is the S&P 500. Now, I've got the S&P cash versus the ES mini up here. So we've got the S&P, that's up at the top. You can see some lines going across the screen out there. Those are your primary trading range boundary lines, brought to us by good old Bud Rolfs out here. The black lines happen to be the monthly primary trading range boundary line, 1750. We've talked about 1750 here the last several days with the S&P cash being above that level. That sets up a potential 100-point move out here, 1850 inside of the S&P. If in fact 1750 holds out there, but what's more important about this chart is really the bottom portion and how it correlates to the top. Now, the bottom portion of this chart is the Euro-Japanese yen currency pair. My contention is just simply by overlaying the two that with regard to the stock markets, the Euro-Japanese yen correlates better than any other currency pair to what's going on inside the stock market. What you look for are divergences. Now, here's the problem. Here's the good thing about divergence. Here's the problem with divergence. Divergence doesn't tell you when you're going to see a change. It just tells you what the change is likely to result in. And if we take a look, we're just going to step back here. I'm going to come back into the December time frame here of 2012. The bottom portion of the chart here, you can see the euro was moving up. And we can see here that the S&P 500 was moving down, making the bottom. This was coming back into the time frame of the U.S. fiscal cliff time frame. Of course, one of the fiscal cliffs out there. So the market's moving down, but the euro moving higher out there. The currency pair is always going to be the one that wins. What happens? The market continues moving higher. Then we see a time period here. This is back in about the February 2013 time frame. The euro starts making lower highs out here. That ended up leading to a correction. inside of the S&P 500. We see another time period here where the euro is moving down. The stock market was moving sideways to up inside the S&P. Small bit of a correction there. Then we see a larger correction that took place. This is from April of 2013, April 15th to about the 18th. Yet the euro was moving higher out there. That's on the bottom portion of my screen. How about as the market was making lows back in June 24th? June 24th, you had the markets, the S&P. We made a pretty significant low. Yet what we were doing here was we were making higher lows inside of the euro, Japanese yen. You can see how that led to a nice move. You can see if we take a look at the tops here, July of 2013 to about August 2nd, the high out there in 2013 inside the S&P 500. We were making higher highs inside the S&P. If we take a look at what was going on inside of the euro, lower highs out there. That led to a correction. So where are we now? So fast forward to where we're at. The euro, Japanese yen, that has been making lower highs. We're going to see a higher high here at the open, very close. So what we are seeing here is divergence. And unless that divergence, well, here's the way that divergences get reconciled. It's not really me it's not my opinion. It's really just going back and taking a look at the charts. Doesn't tell you when, just tells you what is going to be the likely outcome. And this is really nothing more than a business of probabilities, using stops, using management, understand where natural areas of support and resistance are. Now, if we go take a look at the intraday chart here of the euro, Japanese yen, because the other currency pairs are important, but I think with regard to the stock market, the one that we really want to be paying attention to and understand is what's going on inside the euro, Japanese yen. Now, we had if we take a look at it here right now, this is a 30-minute chart, then we'll go back to a daily chart. We can see big, huge move down inside the currency pair, but what it was also doing, it was getting that rubber band can only stretch so far. And when that rubber band stretches, there's going to be some kind of a snapback. And that snapback, that's determining, the market when I say stretching so far, because it gets so stretched, so oversold, or so overbought. In this case here, truly oversold. And so we're seeing the first bounce out of this oversold territory. We take a look at just coming from the high to the low out here. In essence, what it's done is a 0.382 retracement by getting up to about the 132.50 level. That's where we're trading here right now. We'll see if there's some more legs in here, if it wants to move up to about 132.89. I suspect that it does, just simply because we had a nice wide-ranging bar coming into that 0.382 retracement level. And so that says to me, what's really game here, probably about 132.89. That puts a little fuel in the market for, Twitter to open up whenever that starts trading, 10, 10:30, what have you. But folks, the divergence is out there. Doesn't tell us when, but it does tell us the direction. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 31 points, trading out at 15,777. S&P up a point, trading out at 1772. Composite up 77 cents right now. A flat market out there. Russell 2000 up 4 points. Apple down $1.55. Google up down 9 cents. Microsoft back 28 ticks out here. Boy, Microsoft has been a strong stock, leading the charge to the upside. Up 32% here this morning. Celldex Therapeutics, CLDX, is the ticker symbol out here. It looks like they've got a breast cancer drug out here. It says worth about $10.6 billion. I don't know what else is. We'll take a look at that stock chart in a bit. Out here, you've got Dexcom, DXCM. That's up 20%. HomeAway, AWAY. That's up and away. Up 19% this morning, up $5 and change. Tempur Sealy Pedic Perfect, whatever it is, TPX, the mattress. To the mattresses, folks, up 19% here. Nope, up, hold on, where is that? It just, up 15%, up $6 and change. The 3D company Stratasys, SSYS, up 6% here this morning. Rockwell Automation up a nice 4.5%. Celgene up about 3% out here. Randgold, GOLD, that's up a nice 4.5%. Netflix up a couple of bucks. To the downside here, Nation Star Mortgage Holdings, down 20% out here. Just truly taking it in the shorts out here. Looks like Stonegate Mortgage to acquire Nation Star's wholesale lending channel. Apparently, in any event, you got Tesla Motors. That's off another $5 this morning. Whole Paycheck Market out here. Whole Foods down 10% this morning, off $6. Solar City off $5 and change. Flowers Foods off 15%. That's down $3.76. Noodles, one of those recent IPOs out there. That's off about $4. That's down 8%. The Fresh Market. They're taking it in the shorts. Great stores, the Fresh Market, Whole Foods out there, but they are struggling here this morning. They are trading down about $6 and they're trading down about $3.30, 6.5%. percent out there. Our call number is 877-927-6648. We'd love to hear from you. We can take a look at your stock chart. I'll do whatever I can to answer your question. What we've got up here on the chart right now on our screen is the euro U.S. dollar currency pair. Now, it's the weekly chart that I've got up on my screen here, but, boy, talk about running into a brick wall, and that was the descending price channel. That one is the channel that dates all the way back to 2008. Last time we had price up in this channel line, big bearish engulfing candle. That was during the week of May 13, 2011. Had a pretty large pullback at that stage. In fact, if we go take a look at what that, pullback was a 100% move of a move is what it ended up doing. It ended up moving all the way back down into the lows from July of 2010 out there. By the way, the euro right now trading at 133.66, 100% move of a move. In this case here, would take you back into about the 123 level out here. First, what we have to be paying attention to, two real lines of support. Number one, you've got the diagonal line of support. That's that rising price channel. You can see so far this week, prices move down into it. If you can see a break below that level, that will set up your horizontal support. That's the red diagonal line going across my screen. That is where Super Mario and gang have been hanging out here. Anytime price recently, and by recently I mean getting back into the March time frame, anytime price has been down in this area, we have seen the bears come out and defend that level. Of course, if we go from the low out here, that's the low from July of 2012 up to the high that was put in a couple of weeks ago. What you will also see at that horizontal level of support is your 0.618 retracement area, 127.24. So I would assume that if, in fact, the euro can break below this diagonal price channel, rising price channel, we'll see some support right at that 127.24 area. That is on the euro-US dollar. If we take a look at the daily chart for this, it's back inside the lower part of its range out here. Now, the day is not over, and there is a strong area of old resistance. That should be a strong area of support. So we'll understand just how weak the euro is going to be with, as a result of Super Mario out here, because that black horizontal line that you're looking at on my screen, that is a price level right about the high of 134.14 out there. That's a level. Now, if you see it hold that area today, that'll just show you just how strong that level of support is. Now, what we can't see here about the euro is that it moved all the way back to its most recent breakout area. So in the push down this morning, it moved all the way down to and the breakout area was September 18th. That was courtesy of Uncle Ben Bernanke out there. That low was 133.37. You can see we pushed down, or the euro pushed down a bit lower, 132.94. This black horizontal line out here, closed below it, and then the euro will have blown it. And then we'll go back to the weekly chart and take a look at that rising price channel over the next couple of days out here. That's on the euro-U.S. dollar. Let's stay in the currency pairs out here for a moment. Let's go take a look at the U.S. dollar, Japanese yen. Let's go see what it is doing out here. It's on its way to complete. Well, it actually did it. How about that? Looks like it completed the target. Now, what I have drawn here on my screen is a Gartley buy pattern. Now, I had drawn this, as you know, days ago out here as a target area for the U.S. dollar, Japanese yen. The price target that I had identified was 99.54. What we've seen here is a high of 99.40 out there. Why that area? Well, simply because it's a 1.272 expansion of our B to C swing point. That says that the range for this Gartley sell pattern, somewhere between the 99.54 and where now I guess we can call it really the 99.40 area, the high of today, and 99.73 out here, which would really be the 0.786. You're using these, when we use these Fibonacci summation numbers out here, when we use 0.618, 786, 1.272, 1.618, look, we're not about trying to, we absolutely are not about perfection, because it's the lowest possible standard that exists in humanity. There's nothing that's called perfection. Don't strive for perfection. We use these numbers as our guidelines, and then we look for other signals in order to be able to put on trades out there. So that's on the U.S. dollar, Japanese yen. Of course, what you want to do, this is a daily chart. You'd want to go down to more of an intraday chart here. If you're trading the currency pairs, just understand the heartbeat out there. That would say, where's that on my screen out here? It's got to be right here in front of me. There it is, right next to the daily tab. I should have known that. And if we do take a look at the the U.S. dollar, Japanese yen. At this stage here, this is the rising price channel. So that rising price channel actually says, well, maybe it actually does want to go hit that target area that we identified on the daily chart, because what that would do, let me expand this out here. Looks like I need to expand this up a couple of more. There we go. Okay. It hasn't hit. It was close to hitting that area. You can see that probably is the extent of the move. Now, that doesn't mean that it won't move higher. But what you'd have here, if you were trading the U.S. dollar or Japanese yen, you would have to make this a must of a chart to put up on your screen. You'd have to have the 30-minute chart, because the 30-minute chart here shows a number of A to B equals CD patterns that are completing or have completed with inside this rising price channel, natural price channel. And if you get to a Gartley sell and you were to take that trade, just because it started working, let's say, and started pulling back, what you would want to see to make sure that you're on the right side of the trade is you would want to see a break of this rising price channel here. Not a break with small little bodies like we've got in this area here from 3, 4 in the morning on November the 5th, but some type of wider ranging bar out there. Otherwise, and this will help you. So this is how you want to put together a number of different patterns on the different instruments that you're trading out there to be able to look for clues. So that's on the U.S. dollar, Japanese yen. I think we didn't cover the Great British Pound out here, so maybe we ought to take a look at that. The Great British Pound here, that had pulled back just slightly. That had the least movement out here on the news announcement of Uncle Ben, Super Mario. All that did was move back into a little bit of a breakout area at 5 in the morning. From November the 5th out here. If we go take a look at the daily chart here for the that broke its descending price channel, and that did that with conviction out there. So the Great British Pound, what that wants to actually do here, if we put the daily chart up on my screen, looks still to me like what the Great British Pound U.S. dollar wants to do is move up into the top of its consolidation box, somewhere in the 162.50 level. In fact, if we take a look at a daily chart here, potentially the A to B equals CD. If the low came in here today, you'd see you've got the 1-to-1 or 1 to 1.272 that would complete up at the top of the box. That's on the Great British Pound U.S. dollar. Now, let's go over and take a look at the hard currency marketplace out here. Let's go take a look at Goldilocks and silver. If we take a look at gold, it's trading right now back about $9.60 out at $13.08. Now, this is the daily chart that we have on our screen out here. You can see this little sub-correction price channel, rising price channel that gold has been traveling in. As it moved back this morning, it hit the bottom of that price channel area. So the low of 1326, or right around there, is going to be an important area to take a look at. Now, on the daily chart, what it didn't do, which you would have liked it to have done from a long standpoint, long or short, just to give you some type of a signal out here, would have been to come back into the October 15th swing point out there. October 15th swing point high is 1287.70. 110,000 contracts is what I show on that trading session today so far, 114. So what that tells us is we're pushing lower with volume into a swing point. It has not gotten down there, but it is pushing lower out here. The real key area here is going to be this red line, this red channel line. That has acted as a significant area of resistance ever since the highs back in October of 2012 out here, and that's the price channel that Goldilocks is traveling in. So we know it's pushing lower with some volume today, accelerating volume into the most recent swing point. Now, the breakout here had, about 165,000 contracts, so at least it's coming in with a lighter volume so far than that, but it has not tested the swing point low from October 15th out there, so I would say be careful. Now, of course, let's go see if we can find a intraday chart out here. Okay, here's the 120-minute, but let's take a look at, there's a 15-minute chart out here. So there's the big volume that came in, and what that says here, if you take a look at that volume bar here at 8:45 this morning, we had almost 31,460 contracts during that session. That low should be tested. So the 1296 area should be tested. That was a 15-minute chart here. Of course, Tom's favorite is a 10-minute chart, so let's go put up the 10-minute chart out there. You'll see even, 26,000 contracts. You're just trading inside there. That low should be hit. You can see here on the intraday time frame that price had gotten down into a sold condition. So right now, all that we're seeing inside Goldilocks is just simply working that condition off to the upside. No conviction to the upside here, volume-wise. In fact, if anything, volume's been dissipating here. So that low at least should be tested again and tagged. That's the 1296 area. That is on gold. Let's go take a look at high-ho silver out here. Silver right now trading back about 17 cents, so not too bad with the exception of the mere fact that it is below its rising price channel out there. We saw a test yesterday of that. Couldn't get back inside. Looks like intraday here. This morning we saw a test of that. Couldn't get back inside. That's not a good thing. It's trading inside, or it's tested the October 15th swing point. That is got 28,000 contracts out here. It is tagged that area so far with 32,000. That says, you know what? It's going to go down and at least test the lows, $20.49. Right now trading out at $21.58. That is on silver. Let's go take a look at light sweet crude out here. Light sweet crude having some nice action yesterday. Of course, we knew that light sweet crude had moved to a level where that rubber band had just simply stretched. It stretched down on November 5th as it got down to a low of 93.07. Big old rubber band stretch, big into the oversold condition out there. And all we saw, now we saw a nice little bullish engulfing candle yesterday, but you are not seeing follow through today. If anything, you've got the four colors, four moving average lines on my screen here. The black one is the 8. The red one is the 21. Then I've got the 50 and the 200 out there. Really, if we were just using Fibonacci numbers, we'd use 144 instead of the what is it, 53? I can't remember. Is it 51, 53, something like that? If we look at the summation index out there. In any event, you're not getting follow through today. All that we're seeing light sweet crude do here is just simply bounce, move sideways. If we do see some follow through today, meaning a higher close somewhere above the 94, 96 level, then what that would say is, okay, it's going to go ahead and bounce into the $99 area, which will be running right into the top of the resistance of that consolidation that it has been traveling with inside of. Let me see if I've got an intraday chart here for light sweet crude. Well, even if I don't, we can most certainly put one up here. Well, we'll put up the continuous contract right now. Give me a moment to do that. We'll take a look at let's look at a 10-minute chart. Oh, that's a nice pattern, isn't it? Yeah, that is a nice pattern. There's your 1.618 butterfly sell pattern that came in. Let's do this here. The normal move of a butterfly pattern is back to the 0.618 level, and that's 94.82. You're trading 94.29. That is normal out here, but you were just simply coming down. It looks like it wants lower price to me. But let's go and take a look at the intraday chart here. Let's look at a 30-minute chart for light sweet crude. Let's see what patterns we've got out here. Let's look at maybe a little slight price channel. See if this thing broke through here. It's going to take too much time. Let's take a look at let's take a look at yesterday's bounce. Boy, time just flies. Looks like maybe about there or so could be that little rising price channel. We're seeing here light sweet crude really breaking back below it. 877-927-6648. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 26 right now. S&P just about to go negative here. NASDAQ Composite is down about 10 points. The NASDAQ 100, that's off 10. New York Stock Exchange, that's off 10 points. Net declining issues, not a big deal here yet, minus 42. But yesterday, the bears are in control. They're certainly in control of the wider swath of the market. The New York Stock Exchange, that is, you'd need 975 plus net advancing issues today in order for the bulls to actually take the market back. Boy, how'd you like to be the folks at Twitter and potentially price your stock and come out on the day of a potential market high out there? Pretty amazing. In any event, let's go take a look. Let's look at bonds, natural gas. Let's round it out here. Here's the weekly chart for bonds. Boy, it tells you it's got a stiff wall of resistance, being that descending price channel out here. That is the weekly chart that we're looking at. Daily chart for the continuous contract out here. It broke through a rising price channel as well, so a little bit of a subcorrection that was going on there, and that does not bode well for the 30-year Treasury. Let's go take a look at natural gas. I was trying to take off for the moon earlier. Let's go see what it is doing here now. Natural gas, I know I had a call yesterday. I believe it was Lou was calling about natural gas, and what I was showing him is a couple of things. Number one, natural gas has been traveling a little sideways consolidation. And when it broke that consolidation, that suggested that price would travel down to equal to or greater than the consolidation level. Now, interestingly enough, that price point brings you to about the 331-ish level, which happens to be a 1.272 butterfly. Now, what I also indicated was the trading session here from November 5th was a key reversal session out here. But and normally I heed key reversal sessions. However, if you really fill in the gap out here, the gap from the trading session of November 1st to November 4th, remember you always need to fill in those gaps to really understand the candle sessions. It really ends up not being a key reversal session out there. So right now what we're seeing natural gas do is it's going to get up. It's probably going to try to get back inside that consolidation. If it can't, then it says natural gas ought to come down and make that either 1.272 or 1.618 butterfly pattern out there. Let's go to Lewis in Boston. Lewis, thanks for calling. Thanks for holding. How are you this morning?
Good, Steve. How are you this morning?
I'm doing excellent. Thanks so much for asking. You wanted to take a look at Zillow, I believe. Tell me what you're doing and how I can help you out there.
I would like to get into it, and I'm looking at the gap. It's on a 6 months daily, and it's, I believe, is July 30th.
Give me a second.
And it's at
right. I see that. Yeah, so you're looking at the July 30th, August 1st gap there. You had some nice wide price spread. You didn't have accelerated volume there, which you really like to see on a breakout. So the volume, and it's trading inside that bar right now. Go ahead.
Excuse me. On August 20th, it did have accelerated volume.
On August. Well, I'm looking at the actual breakout session, though. So if we're taking a look at that gap, that breakout from August the 1st, the volume on August 1st is really what I'm benchmarking it against, which is 1.3 million shares. And yesterday you were moving lower with 4.3 million shares. That's not a good scene. In fact, if anything, it really says that Zillow could move down to the June 28th. Level, which has got 3.2 million shares, right around the $55 area. Here's what I would do, Lewis, and because we're just about to go off the air. What's real key right now is the swing point from October 9th, only 1.5 million shares. If it closes below 75.55 with more than 1.5 million shares, it will actually be setting up an A to B equals CD down. So you might have to be real patient on this thing because that's what it looks like it's doing. All righty?
All righty. Thank you.
Hey, thanks so much for calling, Lewis. Hey, folks, have a terrific Twitter Thursday. Look forward to seeing you in a few or tomorrow morning.
It's me, Mario.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.